This video is brought to you by the award-winning prop firm, Fidelcrest. Right, folks, we've got Brandon and Bess back on the show to give you a 5-step trading plan that's going to keep you on the right side of the market, and he's got a super simple way to help you remember to stay on the right side of the market. You're going to see what that is in a second, but first let's hear from my sponsor and then jump into the video. Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Fidelcrest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
All right, so check this out. So I took this trade and now I'm going to break down why I took it and each part of my thought process. No time wasting, let's begin. Now, we're going to talk about the theory. I have a theory, and I think I'm going to begin every trade breakdown with this from now on. And my theory is to never go against the momentum unless a reversal is clear. This is my philosophy on the industry. I never care whether a market is going up or down. I never care where it is going. I just need to know that it is going. Trading in the markets that aren't moving is possible, but it's a lot more complicated as you need to have extreme precision. Using momentum, which is what I do, is to go with the momentum, to go with the flow, because it's a lot simpler, right? So let me quickly explain something before we move on to the next part of my thought process. I want you to imagine yourself in a river. Imagine yourself floating on some kind of flotation device, maybe an inner tube of sorts, right? Now imagine yourself trying to go against the flow of that river. Try it. Close your eyes and try to imagine yourself using some form of propulsion to get against that mighty river. You might get enough power to eventually do it, but think of how much of a struggle it would be to fight against such a powerful floating river. If you do end up getting to go against it, it's probably that flow wasn't strong enough in the first place, and it's most likely it wasn't even worth it. So now we have the bias. This is the second part of my process, which is to find the bias. What I mean by finding the bias is to simply figure out which direction the market is heading, right? So what I would do in this case is I would zoom out all the way, right? And you can change your perspective to do that. When you zoom out even more, you realize that it is definitely a bear market, right? So here's what I want you to do. Close your eyes again and think of a river that doesn't have any waves or commotion going on at the surface. You might think that this body of water isn't moving, but oh, rest assured, it is moving. All you have to do is put a leaf into the river and watch the direction it floats. You now have your bias. Markets sometimes are like that, where the surface don't look like it has a lot going on. You typically find this on lower time frames. And if you zoom out, you would realize, if you even go into a bigger time frame, you'd realize that the market is indeed moving. Now, this makes me backtrack to my previous thought process, which is the theory. Only trade in markets that are actually moving. So if it's consolidating on a lower time frame, which could be symbolic of where you look at the river, there isn't that big of a flow. I simply need to walk a little further down to where the flow is, and then I have my entry. In essence, I simply need to wait for the market to actually pick up some steam, and that's where I will get in. So now we have the third part of my thought process, which is the analysis. This is where the work actually begins. Time to get cracking now, and this is where we begin to analyze, right? For me, it's important I do these 2 steps before I even begin my analysis, as time is a very valuable resource. It is a currency, one in which I don't like to waste on shit. So what I do, I will make sure that this market is even worth my time before I analyze it. So now I'm looking for signs that tells me sells. I mean, I don't want anything that suggests buys, right? Think about it. If the market is selling, it's a bear market. Why would I want to see anything that aligns with a buy? I don't want any of that. That doesn't make sense at all. I'm looking for candles that suggest rejections to the high. So let's look at that here. You can actually see rejections to the high, right? Nice big black candles, and price for whatever reason can't break this area, right? I'm looking for a pullback. That's good, right? I'm looking for where price would have tried to grab liquidity. That also seems pretty high. Seems pretty good. And I just want everything to align with a bear market. To achieve this, I am not only using what I see, but what I believe everyone else believes. Charlie Bilelio said, "The market is simply a machine that transfers wealth from the impatient to the patient." This is where I am now psyching out not only the masses, aka the retail traders, but also the institutions. Because where some teachers will tell you to think like the banks, in my opinion, they still get it wrong simply due to the fact that I don't think all institutions are profitable. I think that is a rather ignorant thought process. And in fact, there are a lot of institutions that have big money, but think like the masses. I know this because I know someone who runs a hedge fund locally where I live, and he thinks exactly like that. I'm not going to call names. I'm not trying to think like the retail traders, nor am I trying to think like the banks exclusively. I'm trying to figure out what they're both doing and position myself in an area where I can take advantage of the potential opportunity in front of me, which in this case is sells, simply due to the fact that nothing suggests buys, right? Now, if we look at the masses, they would be interested in buys in certain areas here. They'll be interested in buys down here because it's at a really extreme low. They'll even be interested in buys in these nice big black candles. Why? Because again, that's exactly what they've been taught, right? Now, for me, my analysis and every part of it leads to sells, and I'm not going to go into excruciating detail today on how I would look at each and every single candle and what that would tell me, even though that's exactly what I do, all right? Because if I were to do that, this video would be 500 minutes long, all right? But nothing at this point, nothing suggests buys, in my opinion. Even this structure right here suggests sells, where the market would have gone bearish, induced buyers, and then most likely going to go back bearish. All right. Now, before we continue, if you like the way I'm breaking down my thought process as simple as possible, you can check out my channel at Ikata Trading on YouTube, and be sure to subscribe if you want to see more content like this. If you have any questions for me directly as well, I'm more than happy to help. Simply reach out to me on Telegram at Ikata Trading. And yeah, on to the entry. The entry. This is where the party begins, because now this is where we put the pedal to the metal and try to actually engage with our thought process. Essentially, this is where we put the icing on the cake by breathing life into our analysis. What I'm looking for here is, again, signs that the market has or is rejecting a high or the top side, and showing signs that it might be preparing to sell. I do this by looking at what the candles on different time frames would be telling me, right? And you can see that here. You even have nice big bull candles, and then all of a sudden it's going bearish. Why? What is it trying to achieve here? What is it doing? If it was going to buy, why would it be showing me signs that it might be trying to sell? Now, what I believe is, in order to take good trades, you have to have perspective, and you only gain perspective by looking at the same thing from different angles. In this case, different angles would mean different time frames, right? For me, all time frames again align with sells. Nothing should buy, so I sold. I placed my stop loss above the last area I saw rejection, which would be this area here. I placed my stop loss above that. And I mean, think about it. Why would price go back there if it already rejected there, right? At least soon, right? At least soon. So, and then after that, I walked away. It's simple. Went about my business, because the second part of my work is over. I think the trade is made up of three things, and they are analysis, execution, and management. And in this part of the process, we are on stage 2, which is the execution. So we simply now have one more stage, which would be the management. Definitely give this video a like if you feel like it's a good breakdown and you support what the Trading Nut is doing. Last but not least, it's time for the management, and this is where the trade actually begins to do what it was supposed to do. I, again, would not know exactly what it's going to do beforehand, but this is something that you have no control over, and that's why management is the last part. In order for management of something to occur, there must be something to manage. This is the case here with this trade. A lot of traders actually also suffer in this area, because a lot of traders want to secure profits too soon. Relax. Let the trade run its course. You remember the river? You barely floated 20 feet from where you got in. What is the point in going through all of that headache to get in if you're going to get out a small way from where you engage with it? Maybe it would have been better if you didn't engage at all at that point, right? I held this trade for about 3 days, from the 21st of April to the 24th of April. And yes, I did hold it over the weekend. Contrary to popular belief, typically that only negatively affects you if you have the direction wrong. Also, I would have been slowly trailing my stop loss into profit, as the profit would have been racking up for me. So pretty much regardless of what, I would have been more or less safe. Now, the end result is I closed the trade around 7 a.m. on the 24th of April, and that would have been around this candle somewhere here, right? That would have been, somewhere here, right? Somewhere around here. And the only reason is I was traveling at the point in time, so I did not want to not have the ability to actively manage this trade. The trade ended up with around 130 pips of profit or so between two positions. The first position giving me a risk reward of about 1 to 8, and the second position giving me a potential risk reward of 1 to 3. And that's the end of that when I do get to take another trade like this, or you can rest assured I will be doing exactly that. On to the next. I hope you guys enjoyed. My name is Brandon, also known as Ikata Trading. Subscribe to both the Trading Nut YouTube channel and my own. See you guys in the next one.
Alright folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So folks, to find out more, click the link in the description below or the card above.
So there you have it, folks. What a great little insight into how you can structure a trading plan and something you can remember when you are trading against the trend. It's like going against that river. Be like water, Bruce Lee and all that. So folks, if you do want to see more videos like this and don't want to miss them when they come out, then hit subscribe, like, and that notifications bell. Click all and you'll be alerted when they do drop. Also, if you're looking to automate anything, check this out. Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.